JBlog 2011, June 4th. Starting out, of course, we had a very um, exciting week. The market dropped quite substantially. Of course, there were big pronouncements in MarketWatch that the Dow is heading to 20,000. Certainly doesn't look like it to me, but we'll definitely see. Couple of news stories I came across that are of interest. One of them happened last week is Moody's warned that it might be downgrading U.S. credit if Congress does not um, approve the debt ceiling anytime soon. Then it could very well be that Moody's would downgrade U.S. credit, which of course makes perfect sense. So otherwise, they couldn't pay their bills. So that took investors by surprise. The other thing that of course happened on Friday that again gave the market a little hiccup is that jobs came in and jobs continue to be quite bad, as I've been saying for a long time. There is no recovery. There's simply papering over of problems with printing of money. Lots of liquidity has been released into the market, and yet 2 years after the so-called end to the recession, we still don't have anywhere close to the kind of job creation that we should be having traditionally, simply because this recession has never been allowed to run its course. Just like a fever, just like a cold, you have to let an illness take its path so that the body can heal itself. The same holds true for countries and therefore for the economy. So we had a pretty busy week. Stocks drop 2.3% in the week. And again, this is not that surprising simply because the market is starting to wake up to the fact that all of those promised earnings just weren't quite coming about, and nothing was quite as rosy as it was supposed to be. And do keep in mind, this is after running a $2 trillion deficit. This is not like the economy is doing this all by itself. P/E ratio, of course, looks better, has dropped below 23, so that's a good thing. But it has to drop much, much further from here for there to be actual value. The ECRI index has been showing some weakness. Now this one is only published once in a while, but it's basically one of the more reliable predicting indicators of where the economy is going. It is showing a little bit of weakness over here. Let's see, what else do we have? Oil has been going up slightly. It's back on top of this channel. It's dipped a little bit within this channel. But it definitely, once again, isn't showing a lot of strength, but it's also not showing a lot of weakness, which is interesting. There's, of course, a lot of noise being made in the Middle East. Natural gas is going up. Which is good because I have natural gas. I bought natural gas somewhere down here, and I'm holding that for quite a while now. Just a hunch. Gasoline has dropped from the levels of the very highs up here, but it's still wholesale at above $3, which does drain money out of the pockets of consumers, and that money that can then not be used to buy other things. So between the price of gasoline and the price of food, which is going up as well, eventually the consumer will be squeezed more and more, and will just have to cut back on their free spending ways. But I don't see that happening around myself at this point. It is quite amazing. Gold continues to have a good time because, of course, when there's talk of more inflation, more money printing, then gold will go up because you can't print gold. Silver, after this big bounce here, has dropped down. Silver, of course, being an industrial metal, would be used less if less people bought things. So silver could potentially be hit. Gold silver ratio is currently at 42, which is still very much too high for where it should be. Gold in euros is again at a historic high, because we do have to keep in mind that by looking at everything in US dollars, we are jaded. In that if the US dollar goes down, we automatically think commodities are going up, but they're not necessarily. Copper, again, the metal with the PhD in economics, is clearly saying that things are slowing down. Nice rounded top. As for the markets themselves, the last week has been pretty brutal, and we've broken an important level of support right here. Now let's see how much further it goes down from there. And let's just